Hello, good afternoon. Welcome to today's webinar. You're listening to me live from our Nairobi offices here in Kenya, and it's actually a pleasure to have you on board. Thank you for tuning in to today's webinar, and it's a pleasure to have you around. So basically in this webinar, we're going to be discussing about a very interesting topic on tax management. So basically the objective is to ensure that you understand the key principles or the basic principles that underpin tax management in Odoo. The objective including to understand basic record keeping to ensure you are understanding how to just key in the basic records in the system. Then from there, we understand the reporting element of it to understand how you're going to get your tax balances at the end of the tax period and how can you be able to demonstrate the procedure on how to do it. Then finally, the key objective as well is to just ensure that you understand best practices that you're supposed to adopt after the tax period has already elapsed. So those are the three key objectives you're supposed to look at through this webinar. And just as a point to note, we are not really interested in the specific localizations at this particular point because we want to ensure that all the people who have tuned in are, we're just underpinning the general accepted principles. So we are not going to delve into specific localization just at this point because we want to ensure that everybody understands exactly what we'll be discussing. So that's just the whole point of this webinar, to just air out the objectives as we proceed. So what happens is, from here, just a brief introduction to myself. My name is Muyanzi Wallace. I'm a business analyst here at Odoo, or rather a project manager here at Odoo as well. And my role as a project manager is simply to implement projects. By this, I simply mean to do a business analysis, inquiring from the client on the business requirements or the business needs. Then from there, after inquiring from the client, I should be in a position to configure the system better to tailor the business requirements that are demonstrated. Apart from that, my other objective as well is to ensure that I provide as much feedback to the product owners and whoever is relevant as a stakeholder to ensure that we improve our product further and to serve our users to the best of its capabilities. So I'll just be delving into this. So our agenda of today is simply to understand a few things here. The first thing is just an introduction to Odoo as a product. You should be in a position to understand what Odoo really is as a product. What is it meant to do? What does it achieve? And something like that. Then the second part of our agenda is to just understand the basics of tax reporting. This simply means that what is supposed to be involved outside Odoo, nonetheless, even with Odoo as a product, just understanding what is supposed to happen outside Odoo. So we'll do a very brief understanding of the basics. Then from there, we'll definitely delve into the demo where we'll now actualize exactly what you have been speaking about. Then finally, you're going to just conclude. Then I'll be able to now address any questions that will have arisen in the course of our activities or in the course of our webinar. So as a start, what is Odoo? So Odoo is simply, as it's listed here, Odoo is simply an all-in-one management software. It's an easy-to-use software. So what we mean by this is that Odoo is a suite of applications, and with this suite of applications that is integrated, it's meant to solve different business requirements, if I may put it that way. You could want to manage your opportunities from the CRM application, then you'd like to manage your sales, you'd like to manage your accounting, you'd like to manage your inventory, you'd like to manufacture what you sell, you'd like to purchase. All these applications come together as a suite of applications in one tool, which can assist you now ensure that you manage your operations well, let me put it that way. So how can Odoo help your business? With the advantage you pointed out earlier, we realized that as one tool compared to other approaches whereby you could have a standalone software for each and every tool, then you're in a position to realize that Odoo as one tool can be able to encompass all these requirements. And with this encompassment of all the requirements, you realize that it is way efficient to have one tool that can be able to address specific business requirements compared to having each tool to manage all your requirements that you have. So with this, you realize that you work on efficiency, meaning now the time that you take to do tasks are lesser because you're dealing with only one tool. And it's definitely effective because you're achieving the objective that you want to achieve. So it's efficient and effective to have only one tool to assist you manage the specific business requirements that you may be having. Apart from that, I think now we could delve into now the subject. The subject is simply demystifying tax reporting. Understanding what really it is, then understanding how we can now gradually grow into the product to understand what you mean by it. So with the basics of tax reporting, the first thing I could point out is as a business, you could have so many transactions, but the key transactions that any business could have is selling and as well purchasing what you're selling. So those are the two key transactions that underpin a business. You could be having so many, but these are the two key transactions. So with these key two transactions, the key thing that you're supposed to understand is that if you are a tax registered business, for instance, because now what happens is if you're a tax registered business, you'll be charging VAT on your sales, but at the same time, you'll be charged VAT on your purchases, for instance, just as an example of a tax. So that simply means that based on the sale amount, for instance, if you are making a sale, then the gross amount of the sale will be classified into two things. You realize that you have the part of it which will be realized in the income account, then you have part of it that will be realized in the tax received account. So the same thing, the same principle underpins purchases as well, because you realize that with purchases, the gross amount of the purchase is also split into two, or it's rather reclassified into two, whereby you have the purchase amount purely, which is now going to be captured in the purchase control account. Then you always have the tax amount, which in Odoo now will be captured in the tax received, tax paid account, for instance. So what happens is, after understanding those basic principles, now we just understand briefly about the Odoo's taxation architecture, meaning how is the system structured to meet the specific requirements. Now, as we start growing deeper into the subject, as we get into the demo. So Odoo's taxation architecture, how it has been designed is that first, the key thing you're supposed to understand are just basically the three things that are listed here. And the first thing is localizations. So at Odoo, we have a list of localizations. This simply means that these are a list of rules that underpin a particular jurisdiction. So we already have a particular localization for various countries, and these localizations are basically for accounting. Particularly, you'll have accounts, the chart of accounts already listed and predefined, and together with the taxes. So in the event your country has a localization, then you ensure you have to install it as one of the very first things in your database then, so that you can be able to proceed with your transactions. So Odoo will always predefine the necessary account and the necessary configurations at the right time in the event you have a localization that is installed. In the event you don't have a localization, you'll have to configure the taxes inside Odoo and everything else inside Odoo. We're going to look at how easy that can be in the preceding parts of the webinar. The next thing is your accounts. So basically the taxation accounts in Odoo compared to other solutions, Odoo tracks the input account, the input tax and the output tax in different accounts. This facilitates easier record keeping and easy tracking of the balances in each account. So if you have input tax that you suffer from your purchases, and you have output tax that you now charge on yourself, you realize that these two are tracked in separate accounts. Then at the end of the period, you're going to close the period to understand what balance you have and make some strategic decisions from there on, which we're going to look at later again in the webinar. Then the third thing you're supposed to understand is simply the reporting element. Because at the end of the period, which I've already hinted out before, you realize that at the end of the period, you want to understand the position, meaning what balance do you owe the authorities, or what balance are you supposed to claim from the authorities rather. Then now you can be able now to plan your way forward. So it's just basically those three key things that underpin the architecture that can just assist you basically understand from there going forward what is expected more or less. So without further ado, I believe it's time where we can move into the demo. And in this demo, I can be able now to actualize a few things that are supposed now to be necessary in you understanding the general procedure, right? Okay. So let me just share my screen here, my database here. Should be visible from your end. So from here, the key thing that you're supposed to understand is, as we had already demonstrated earlier, it's a suite of applications. So we have a list of so many applications to solve different business requirements. But for this case, we'll be purely focused on the accounting application then. And that is where our attention will be fully focused on. And in the accounting application, we'll go straight away into the settings so that you can understand a few things we have pointed out earlier. So when I come to the configuration menu and I come to the settings, first things first, as you have already hinted out before as well, again, is that the installation package will always be filled here. In the event you have a localization, you just pick your country as you proceed. In the event you don't have a localization, then what you will do, we have two options. You could consider just installing your own chart of accounts and configuring it, or alternatively, you could use the Odoo's generic chart of accounts, then edit a few things. So it's dependent on what will suit you better at a particular point in time. And then the next thing I would like to point out to ensure that it's a bit clear, because it will now build the concept towards what we are leading to, is the tax return periodicity. And by the tax return periodicity, we simply mean what is this meant to do. So the tax return periodicity is, you can see here, for example, for my database, I've set it as monthly. This simply means that my taxes will be computed monthly. So to set the tax return periodicity simply means that it gives you the opportunity to set how Odoo would calculate taxes for you and the tax balances for you. So for my case, I've set it as monthly, but if you drill down in the dialog in the box here, you can see you have annually, semi-annually, and all the other metrics you could choose. So the first thing is to set up the monthly or whatever periodicity to determine the tax amount or how it will be computing it. Then the reminder simply means that how long can you set as the reminder the days after the period. So it simply means that if you set, for example, 7 days, it will mean that I'll receive a reminder in the form of an activity at the top right. When I come that day, I'll see an activity, which basically simply means I'm supposed to be capturing my taxes at that point. And then the final thing under tax return periodicity is simply the journal. I have a specific journal called tax entries. And why is this the case? This is the case because in the event I use a generic journal here, then it would be a bit difficult for me to distinguish journal entries relating to taxes and other journal entries in the business. So it's more of, once I have a specific journal to purely manage taxes, then it will be a bit easier for me even to do an audit or to understand specifically the entries related to the tax entries alone, rather than having it. So it's just basically a mechanism to assist us manage the tax entries, rather. So apart from that, I believe I could touch on default taxes, which are going to now as we grow further into it. And the default taxes, you can just set the taxes that will now be applicable on your products. This simply means that, for example, for my case, if the default sales tax on the purchase tax is 16%, this simply means that in the event I create a new product, then it will be picking the default taxes. And with that particular knowledge in mind, then I could simply visit the product to ensure that we just have a brief understanding of what is expected here. So in the event you have a product, for example, for my case, I have a product here, just dummy products here. And so in the event you have a product, you could be having various taxes for different products. So based on the jurisdiction you're in, or basically where you're tuning us from, you have different principles that underpin different products. For example, for my case, I could say agricultural seeds are exempt from tax. So you ensure you pin the right tax on the right product so that you can just have the right record keeping in place. This is just one of the principles. So for example, if I move to the next product, for instance, I can see clothing is purely taxable, so I can see VAT on both sales and purchases. I can navigate to safety equipment. Safety equipment is usually zero rated, meaning that I cannot claim the input tax that I got from there, that I suffered from the purchases, rather. So it's basically just the concept of getting the right tax for the right product based on where you're tuning us from, based on your jurisdiction at this particular point in time. Then when I just come back to the accounting configuration settings, I just proceed with a few settings before now we move into the transactional records. So here, the next thing I would like to now capture is the taxes themselves. So I just click on the configuration menu, then rather than settings, I could just simply go straight away to the taxes themselves. So in the taxes themselves, as you've already talked about, in the event you have a localization, then you'll see exactly what I'm seeing. But in the event you don't have a localization, you'll just configure the taxes. It should be straightforward to configure the taxes. You just configure the taxes that are going to be applicable for your particular product. And the key thing I would like to point out just at this juncture is that the concept of understanding the tax record itself, because right now here I can see you have 16% VAT, but distinguishing between the tax itself and what we refer to as a tax group. The distinction between those two has to come out clearly, especially when you're creating a taxes, especially for someone who does not have a localization and you're just starting from scratch. Then you're supposed to ensure your taxes are set up correctly and your tax groups are equally set up correctly. So what is a tax group, rather? So a tax is simply the individual record. Like say I charge 16% value-added tax. But a tax group simply means a group of taxes that are underpinned together with the same principles. For example, locally here, I could say a good example could be value-added tax. You could be having various types of value-added tax. You could be having the generic value-added tax at 16%. Then you could be having value-added tax, for example, specific for petroleum products, let's say 8% or 16%. So you could be having various types of value-added taxes. That's why all these types are pinned together into one group called VAT group, a VAT group. So the concept between taxes and tax groups, especially when you're configuring the taxes from scratch, is to understand how can you define your groups properly. Because you realize that when you have a tax here, for example, 16% tax, Then when you come to the advanced options here, you realize that we have a tax group. Then in the event I drill inside the tax group, what I'll be able to understand is that the tax group also has specific accounts. So what's the purpose of these accounts? Because if you realize, I already have accounts at the tax stage, if you realize. Because for example, this is sales tax. I have an account here, a sales tax control account, which effectively is usually a liability type of an account because you're supposed to collect money. You're supposed to charge your clients. Once they pay you, you submit to the government. It's more of a liability type of an account. So in the event I have this account here, then what could be the relevance of having an account again in the group? So the concept is, or the logic is, that once you have this account specifically for the taxes, then you'll have to set an account on the group as well to ensure that this is just an account that holds the balance in that belong to the transactions in that tax. But when I get inside the tax group now, it will now give me an opportunity to now merge the results of all the taxes in that group and give me my net position. So the tax group has accounts that now show you exactly, for example, when I drill inside it, I can see the tax payable account is that, the tax receivable account is that. This simply means that in the event I close my periods, the system would now be in a position to evaluate all the taxes in that tax group, then now evaluate whether I'm in a position to claim tax or I'm in a position to rather submit tax. So if I'm in a position to claim, the results will be put in a tax receivable account. But if I'm in a position to pay, or to rather submit, as the right terminology it is, then it will be put in the tax payable account. Those are just the few things you're supposed to just ensure you understand clearly, especially for people who have a localization. For example, it becomes a bit straightforward to ensure that this is okay, just looking at a few things. But in the event you don't have a localization, just consider all those few things among some few more that I could not have mentioned to just ensure that you are streamlining efficiently. Then from here, I believe the next thing I could look at is now understanding now the transactions themselves. Because the whole point is that once you've already configured your taxes correctly, and you've configured your products correctly, then the whole point is now to just capture the transactions and looking at the balance at the end of the tax periodicity, as you've already looked at just a few moments ago. So from here, the next thing will just come and, for example, I have some few invoices here. As you can see, the invoices are, I just have a notifier here to group them by month. Especially this is what you would like at times to just ensure that you understand this month how many invoices have I created. So you could just create a very simple filter to just group the invoice records per month. Then equally, I also have vendor bills for the same, following the same logic, for instance. So for my demo here, I'll assume I have, at the time of this recording, we are at December, at the time of this recording. So for example, I would like to close the period of November and be able to understand what happened during that period. So what happens is, in the event I want to do that, what I'll do, I already have my invoice records, which are here. If I drill inside November, I have 2 invoices. And these 2 invoices, when I get inside the 2 invoices, I have the VAT amount. For example, I have 160 on one invoice, 160 on the next invoice as well. Then on the vendor bills, I also have 2 bills. Just to assist us in this demonstration, I have a bill here with a tax amount. Then I also have a bill on the next one with a tax amount. So in the event I want to understand now my tax liability at the end of that November alone, as it is, then what I would do is to ensure that I close the period, I close the tax periodicity period. To do that, I simply come to reporting, then I'll visit the tax return, the tax return page here, or the tax return menu item in that list. Then from here, I can be in a position to look at a few things which I could provide more context on. So with this tax return screen that you're seeing with me at the moment here, what happens is you could filter it by period. For example, right now I've already filtered, you can see I've filtered it by November. And after filtering it by November, I can see that the taxes I've charged my customers are 320, meaning the VAT I charged my client when I was selling. And the VAT I rather suffered when I was buying is 160, or that I was charged when I was buying is 160. So by default, then the difference is what I'm supposed to be paying the authorities, which should be 160, I believe, that I'm supposed to now pay the authorities. But even before you close the entry, a key thing I would like you to understand is the basics, for example. Like for example here, we have some filters that could really be of added value to you. For example, we have the comparison filter. With this comparison filter, what is meant to do is just simply to assist you understand a trend analysis of what has been happening over the periods. For example, here, if I do here a comparison, I want to compare with the previous period. For example, now we want to close the tax for November, and we want to compare with the liability for October, so we understand whether we are just to general understanding of the position as a trend. Then I could just for a previous period, and it will be aligned alongside the period that I'm in now. So you can just look at the results and you can evaluate further. So the first thing is you can just play around with the filters to just suit your basic capabilities or what you simply want to achieve. And from there, the next thing I think I could just say no comparison because I just want to proceed, but to just to show the functionality. From there, the next thing I would like to simply point out at this particular point as well is that in the event you're in a multi-company environment, and it's only one entity that is supposed to be reporting, or rather doing the filing or reporting, then the whole point is that you're supposed to understand the concept of tax units. But I want to get deeper into that, but to just give you a brief understanding of what tax units are. A tax unit is simply a file which has many companies that are supposed to be filing for. For example, when I come here to configuration, and I visit tax units, I'll say I've created a tax unit called group reporting because I'm just reporting for a group. Then, for example, here I could say the country is Kenya. I pick the companies that I want to report for. Then I say the main company is WAMU PLC, for instance. So when I do this, after setting that tax unit like that, when I come to tax return here, when I come here to the tax unit, I'll have the possibility of choosing, do I want to just file for this company alone, or do I want to file for the group? So when I file for the group, it will definitely pick the results of other companies. But that's actually the purpose of this webinar. I just picked the one company alone. But it's just good enough for you to just understand exactly what it really means. So apart from that, I believe I could just cancel that previous company, just remain the results of one company there. Then, yeah, just the basic filtering capabilities to just assist you understand better. Then from there, I believe you can now be in a position to understand now a tax liability. So we already know it's 320 minus 160, for instance, for this demo, so we already know the difference. But the system ideally should be in a position to complete it for us. So I'll be able to just close the entry. So when I close the entry, the system will generate a journal entry, right? And this journal entry is meant to assist us understand what is payable. But now, for instance, when I look at this journal entry, I realize that the amount that has been posted in the VAT payable account is 720 rather than the 160. This is because I had not paid the tax for October, for instance. So what happens is if you don't pay, then the balance will be piling in the tax payable account until when you now pay it, that's when it will clear. So but by default, it will just be piling up. So the payable account will have that balance. For instance, right now, up to this point, when I post this entry, now the balance should have been reflected in my balance sheet. My balance sheet should have felt the impact of that particular entry. When I come and visit my balance sheet, for instance, I come and look at the balance sheet, I'll just scroll all my way downwards to where the tax section is. Then I'll come and look at my VAT payable is 720. So by default, once it's already there, then the mechanism you normally use to pay, perhaps you could either go to your portal and pay it from there, based on what you're tuning us from how you'd normally pay it. So you'd pay it, then you'd come and pass the payment entry in Odoo, either by, it could simply mean by importing the bank statement, then reconciling the payment with this liability account, just to ensure that you'll net it off completely. But right now, as it stands, even if I file for December, it will still pile on the November one, so it will be more than 720 like that. So the liability account will always be piling until when you now reconcile it with payments to release the liability that has already been recognized here. So that's the second part of it, to just simply understand what are the possibilities we have as far as reporting is concerned. Then now after reporting, because now we have already done the tax return for the month, for instance, we've already known for October, for November, we already have a liability of 160, but added on to previous liabilities, we know it's now I think 720 or something like that. So from here, the next course of action is to, which is also part of our agenda, is to ensure we understand what are the best practices post closing of the tax report. Because closing the report is one thing, and another thing is to simply ensure that post closure you are you are ensuring that you're capturing with the best practices that are available to just ensure that you understand what is happening. So the first thing I could point out is that after closing the report, what happens is that you realize that I would not want someone to go back to my records and tamper with any invoice. That's the first thing. Because I've already closed that financial period. So the system should have a mechanism of ensuring that no one or nobody should be in a position to go back and tamper with that period unless there's some specific regulations involved or some specific right that someone is provided. And now that leads us into a discussion on lock dates. So when I come to accounting, I visit lock dates, which is part of a menu item there. So you realize that when I visit lock dates, this is the screen you'll see. You'll see a dialog box open up, which shows the tax return lock date as per the filing I've just closed. It's 30th November 2024. So what would this simply mean is that in the event you close the tax report they have done, the tax return lock date field will automatically be populated just the way we have seen here. Then what happens is that in the event that has happened, if I would like to create an invoice in that period, the system won't allow me because I have already closed that period. But I'll talk about that just in a few. What I would like to point out as well at this point is that we have some few other things you're supposed to understand here. For example, we have lock sales, we have lock purchases, we have lock everyone, and we have hard lock. So lock sales would simply mean that at times for some entities they would like, for example, they know their sales for the month normally finish at 20th, or normally their last sales would happen on 20th. Then from that they won't make any sale. So instead of waiting for the tax for you to file, for you to close the tax report, for you to lock, you could just consider locking the sales part alone. So there's that flexibility. You can also lock the purchase side alone if you're sure that I've already done all my purchases, irrespective of whether the end of the month has arrived or not yet. So you could just consider locking individual parts alone, just ensure efficiency rather. Sorry for that. So what happens is that here, that's what the two are meant for. But once you have a tax return lock date, it will override the two. So in the event that happens. Then we have, I'll come to lock everyone. Hard lock would simply mean that you're locking that period and no one will allow you to open it. So even the person who has locked it won't be allowed to open it. So it's a very, very strategic decision for you to hard lock something because it's a decision that is very irreversible. You cannot reverse it. But for lock everyone, this is one that is a bit reversible. For instance, right now, if I have locked the return period on 30th of November 2024, then what happens is, if the event I want to create an invoice on a period that is already locked, you'll realize that I'll face a challenge. I want to be able to do so. For example, if I create a new invoice, or if I could rather just duplicate an existing one to just ensure I save time. If I duplicate an existing record here, then I just change the date. I just say this is for November 26th, for instance. You realize that a banner already appears at the top telling me that this date that you're putting this invoice on lies in a period that is already locked. So that's the interpretation of that message. But now, what would that mean? So that would mean that the result of this invoice will be posted in the next period. Now, for this case, should be December. But now, what happens is, as far as this is the case, you'd realize that in the event I want to really post the transaction in that month, and that month has already been locked, then what will you do? You'll request for an exception for you just to do that transaction alone. But now the issue could be, how do you ask for the exception then? So what happens is that I could just cancel that record here. If in the event I want to ask, for example, your accountant asks for an exception and they say that there's an invoice that has been forgotten, but I would like to post it, but the period is already locked, what you will do is that you'll create an exception for him, or you'll give him the access rights to ask for the exception. So you'll come to accounting, you'll come to locked debts, right, where it has been locked. Then, for example, if the invoice that has been forgotten was for 25th, so to just allow me to post that invoice, I could just revert this date back to 24th, for instance. So that he can just post the invoice for 25th, then you can proceed from there. So when I adjust the tax return date here, you realize that it provides an exception for me only to do it. So, but you realize that when I drill down here, we have two options, which are supposed to be very careful when you're dealing with them. So we have one option for me, meaning I can only be the only one who can do the invoice that has been forgotten, or it could be for everyone. So you cannot have exceptions for a specific group of users in the system. It's either I'm the one doing it or it's everyone who is given an exception to do it up until this point in time. So for example, I could say if the accountant has forgotten to record the invoice, you can give me the invoice, then I can just say I create an exception for me, then I say for 5 minutes. I could say the reason is, for example, to record a forgotten invoice. Yeah, then there we go. Then, so I create an exception for myself for 5 minutes, just do the transaction, then we can proceed normally. So what would happen is, in the event I create that exception, what will I do? I come here. I believe I can now post the invoice correctly with that exception now. When I put the invoice date like that, so I'll put it on November, but it has allowed me to proceed. So I put it at November, then I save, then I confirm. So fine. So the invoice has been fully posted. But in the event this happens, with this use case that I've just demonstrated, you realize there are two things that you're supposed to keenly understand up to just this particular point. The first thing is that in the event you had forgotten an invoice, then you do another invoice, it would simply mean that the initial tax report that you had filed is already wrong, kind of thing, because you are now introducing a new record to the procedure. Then another thing you're supposed to understand is that in the event you're doing these exceptions, meaning someone could ask for an exception to record records that were not initially captured, then you'd like to understand or keep a track of which people are doing the exceptions and at what time. So you'd want to understand, the system should give you a mechanism of understanding who is doing an exception and what were they asking it for. So for the latter one, in terms of a record showing the exceptions that have been done, you'll simply find it on the company form. So when I just exit the accounting app, I come to the settings application where I find my company settings, right? I'll just come here to my company settings. Then let me just visit the right company. Here we go. So when I visit the right company, you realize that on the charter of the company form, I'll have an exception link. It will tell you that an exception for admin was valid on 5th December, meaning I created the exception on 5th December at the time of this recording, due to a recording of a forgotten invoice, the memo that we wrote at the log date section. Then if you simply want to view further to understand what the exception was all about, then you simply click on the exception link, hyperlink here. It will take you to the record, to the exception record, which tells you that here the reason is to record a forgotten invoice. The exception was created on this date, this time, and the exception only was meant to last for 5 minutes. So for me, I can be able to record the forgotten record. So the end date can therefore be 5 minutes later. Sorry for that. So it can just be 1501 or 1506. So just 5 minutes later to allow me to do that. In terms of the duration of the exception, the system is flexible enough. You can say either 5 minutes, whatever period, or you can even do it indefinitely. But the whole point is that that menu item for lock dates is purely for people who have the accountant role in the database and not any person who does not have it. So from this juncture, in the event you want to understand further on the entries that were done during that exception, then you'll audit the exception. You'll ensure that you just get inside it. You'll understand the general entries that were made for that exception alone. So you'll drill inside the audit to audit what was done during that exception period, for you to just keep in track of what is actually happening. So that's the first thing, to just ensure that whatever exceptions are being done, you're just keeping track of them to understand where you are. And the second thing was amending the tax return, because we realized that with the first one that we did, we realized that we had forgotten an invoice. So you're supposed to technically undo the tax return we did and now post a new one with the right balance because you had forgotten one record. So what you do in the event that happens, you now come to accounting. And when you come to accounting, you come to reporting and you come to tax return. So basically the basic steps. Then from here, after getting here, you will be able to just simply close entry so that you can get the previous version of the report that you had closed, which is this one, right? So after getting this tax return here, the next thing you would do is to ensure that, because this figure of 720, as you can see it here, may not necessarily be right because it's missing an invoice. So you'll have to reset this draft to remove this entry and recognize a new one, which is the right entry. So if possible, I could even do away with it completely because it's not right at all. Then I close the tax report again, which will now factor in the new record. So I simply close the entry once again. Then you realize that initially it was 700 and something, but now it is 880 because it has factored in the new entrance in terms of record. So what happens is that from here, you can now be able to post the new tax report, right? Then from there, now we can be able to, in the event you just visit your balance sheet, obviously it should be the same, but just to ensure everything is okay, when you come to your balance sheet, you can see the amount is that, right? It has been updated by the right figure. That's the second key thing I would like to point out here to just ensure that you're okay with the policies post reporting. Another third component which I would like to really ensure I've brought into light is as well the fact that in the event you have already done these invoice records, then we have already said that no one should come and edit them. So what happens is that what you have talked about is in the event someone wants to create a new record, then the system would not allow them until they get an exception. That's what you have dealt with. But in the event, someone wants to edit a previous record, so what I've talked about is someone wants to ensure that you cannot create a new record. But in the event you update a previous invoice, then we have a few options here to avoid people perhaps editing previous invoices from a locked period. So the first option is to come to configurations. Then I'll come to journals, for example. So for example, here you realize that when I come to the sales journal, which holds all my sales rather, when I come to the advanced settings options on the sales journal, I'll see a button called secure posted entries with hash. This simply means that each individual entry is encrypted, and now you cannot be able to undo any changes once it's already done. So it basically locks the invoice, not to allow you to do anything on it. And that would mean now when you come to the customer's invoices here, for example, when I come to an invoice here, when I create a new invoice here, and I confirm, just a moment, let me revisit this. Yep, I think it's because I've already done it on an already posted invoice or on, I already checked this box before, but fine. So this would mean that when I secure posted entries with hash, it will lock the invoice and it won't allow you to be able to reset it to draft. The only key thing I would point out at this particular point is that once you check this box, then you realize you cannot be in a position to uncheck it. So the whole point is that when you use this approach, then I would like to really point out that when you check that box, you cannot be in a position to simply uncheck it. And the way it's not as flexible. The only option that could be flexible is ensuring that when I come to accounting, I have an alternative option called secure entries. So the whole point in explaining this is that secure entries is a bit better than secure and posted entries with hash, though both two serve different purposes. The whole point in me getting to this point is to just ensure that the posted entries with hash is a bit stringent in order to allow you to do a few things. It's not as flexible. Because when you secure posted entries with hash, you simply cannot do anything with it. But when I come to secure posted entries when it comes to secure posted entries rather, not with hash, but when it comes to secure posted entries, I can be able to pick which date I want to secure. And securing simply means that once I secure it, I cannot be able to do any adjustment on that particular entry. So for example, I could come and say, for example, I want to secure entries up to November 31st or 30th, pardon me. Then I secure entries. That will simply mean that I cannot be in a position to edit any previous invoice. For example, when I come here, I cannot be in a position to do anything. So it's either, if I want to update it, I could either raise a credit note, but I cannot just simply reset the record to draft and do anything else, because that's not how it would operate. So that is the final thing I could end up with. The whole point is just to ensure that as far as we are concerned here, the event before creating the tax report, meaning the data entry, then we'll have the events during the tax reporting, understanding how to use the tax report, then the events post-reporting. This simply means ensuring that you understand a few things post-reporting. The whole point why you secure entries is just to ensure that the integrity of the financial data so that no one can be able to edit it. It's also compliant with some audit requirements, simply meaning that auditors at times could require to understand a few things in terms of your entries, whether they're secured, how user-friendly are they in terms of security and things like that. Then it's simply error prevention. So those are the few things that could just allow us have this as a very primary objective in one of the agendas of this webinar. But I believe with that, I believe that should be it. That is the key objective of this webinar. I believe I've achieved the key objectives. Just ensure that you've understood the very fundamental concepts from tax record keeping to tax reporting, then to tax compliance post the tax reporting period. So I believe with this, I believe that is it. I think I could be in a position to just ensure that I evaluate whether you have any questions. Yep, I can see as I view it, I can see my colleague has answered a few of the questions. I can see some questions have been purely addressed here. So I believe that is it. So as far as this is concerned, I hope it has been a very insightful webinar to assist you understand the basic things. You do not have to worry. In the event you'd like to understand more and more, I would also like to invite you to our Odoo Academy, which will be hosted next year, early next year, 15th January. I believe the invite will be shared and it will be in due course, whereby I'll also be there in presence together with my colleagues to help you understand a few things. It will be happening on site here in our offices. Feel free to come. I'll be available to ensure that we understand a few requirements from your end. As far as, especially if there are very specific requirements, it won't really be an implementation, but it's just basically consultancy to assist you better use the product to your convenience. So apart from that, I believe that is it. I believe we can end the webinar there, and I would really ensure that you use the system to the full of its capabilities and understand it better. So without further ado, I believe I would like to appreciate you for tuning in today's webinar. I hope it has been insightful. It will add value to your business. For any further clarities and further inquiries, don't hesitate to communicate to your account manager so that he can keep you in touch with a consultant who can guide you better to understand the real depth of Odoo as a product as far as accounting is concerned generally and as far as the tax functionality is concerned. Because definitely in this webinar, we have not addressed everything. It was just picking the key concepts, but there's a lot you have to understand. So you could keep in touch with the account manager so that he can keep in touch. He can connect you to a consultant who can be in a position to guide you better strategically in terms of using the product and ensuring its full capabilities. So without further ado, I believe I would like to wish you a happy ending of the day, and I would like you to use Odoo as much as possible to ensure you streamline your processes. And once again, thank you so much for tuning in, and see you next time.